Welcome to TradeTheMBI.com. This is John's report is for the 22nd, and so much for easy money as the Fed continues to tighten. It's amazing we went, full 8 years under Obama without a rate increase, and as soon as Trump gets in, we've been accelerating those nonstop, and easy money taking it away is certainly going to affect the market because everything just got more expensive overnight, and it didn't even take that. Now we've seen that we've been in a relatively weak shakeout here as we've continued to fade. We were right at the 50%, and we talked about anything below the green ABM. We'll go ahead and put that number up, which is the DO slow right down there at 27.18. It's time to be negative, the market, and certainly below the 50% was another added bonus at 27.08, and here we are just under 27 now as the effects of that are bleeding through. It's going to be a massive increase in the deficit, which we already saw an extra $1 trillion was added to it just in the last 6 months, and that is going to continue to put pressure. So some people will think that's good because it's going to regulate where the market is, but it certainly has its short-term impact. The NASDAQ looking identical, not as weak a shakeout, but the effect is similar. And that was that mean reversion that we were talking about. And of course, that sparked a rally in the euro for no particular reason other than a flight, even though you would think that it'd be more attractive with higher rates for foreign investors. Sometimes logic doesn't have anything to do with what's going on. And of course, that attracted people into treasuries because the higher yield. And oil, though, look at that. We're all the way back at the top. So any of this negation that was going to be, felt in the next month or two has been completely wiped out. And, that's a sign of inflation that has not happened yet. We saw there were huge draws, which means that these numbers about a complete collapse in the GDP at the first quarter were just kind of like crazy talk. But that's okay. And of course, the spike in gold recognizes that we knew that that was going to be heading back up. No shock with that. I did want to go over some of these signals. You can see I got some creative things. We went over this on the Skype chat, and I thought I'd spend a few minutes with it because I think it's worthwhile in talking about it, because it got into some detail with regard to the shakeout as well as the DOC. So we had a bunch of muck early on, and then we ended up with a nice little modest buy signal that began, and then it converted. I'm going to pause real quick, though, and go back to regular Deocon Paint. This is a buy, sell, D test 4, and I was showing an anomaly problem I was having where it flips and it monitors the market in zones and numbers them in zones. And the problem I have with the one of them is it starts off with the 5s, but then it doesn't keep going, and so it doesn't give me the reset I need. So I'm going to convert back to the Deo Paint, and we'll take a look at it from there. Okay, so that was a quick little flip that converts it back to the Deocon Paint, and what I wanted to point out was when we're getting into a trend run. So for instance, going back here, we started to move towards positive shakeout, which again is a powerful thing. Anytime you have the histogram above the yellow line there, you're moving into a positive situation. And couple that with, you're always looking at along with DOC cyan here below red. And it follows through, and then we get what's called our DOC spread, where the cyan will break above the green and or red at the same time. You have cyan is underneath, the green here is underneath red. So clearly, what we would consider a short configuration, particularly with the orange spiking. So we've got an anomaly where we're seeing the ratio. The algorithms have freaked out a bit, and there's been a significant change. Now, negative part of this one is because you've got the steel down here below, you've got a complete reset of short-term buyers. So when they activate, obviously you can see a nice little punch up. But the discussion was here about the shakeout. Whenever you have the magenta line above this plus 15 on the shakeout, you're not in a position that a short is going to be of any power. And in this particular case, you can see the DOC spread comes in, the candle flips, and so this becomes one of those questions of, how long-term a trader are you or short-term? So from a short-term scalp situation, you might see this drop a zone, maybe a zone and +1, but it's not as clear that it's going to reach a 50%. In fact, most of the time, these are after pretty decent runs and you've had consolidation and you'll get one of these DOC readings. But the problem is that you're in a significant trend move. The secondary consideration on that one is you can always look at it from the gold standpoint. As long as it's rising, you don't necessarily want to be shorting into a rising gold line as well. And so in this particular case, very short-lived, short-term buyers crossed above green for a the beginning of a weak buy, and sure enough, it explodes from there, and then you end up with cyan under red again for a brief time. Now, what's interesting about that is that even with the cyan under red, price dropped dramatically, and you got another DOC spread right here. The problem with that is that your difficulty in shorting in this one is that as you get the DOC spread, the shakeout just starts to turn up, and shorting into the rising shakeout is a problem. And it turned around obviously pretty darn fast at that particular point and skyrocketed. Now, of course, this is FOMC, so you get a little bit of erratic behavior, but it's still worth noting. The key element became the third one here, because while you were still within this warning spot, you could look for steel moving above cyan and then coming back below if you had a falling shakeout. The problem is, even when that happens, it's right over here, you're in the middle of rising shakeout. So you don't even get the first dip in your shakeout till right here. It dips back below. And coincidentally, here you have the spike in orange, the DOC spread, green moving below red. This is when you have them all happen at the same time, those tend to be your strongest confluences. And at that particular point too, you also then broke the ABM yellow. So your expectation to that 50% line, definitely clearer. And in fact, this one dropped immediately to the 38%. Well, at that particular point, you can see you now have steel, orange, in between the cyan and the red, which is always continuation. So that lasted all the way through, and then we have this negative shakeout setup going on right through here. You see you end up with a yellow candle, but you don't have any reset of orange in that, so you know it's going to be short-lived. So my expectation at this particular point is that maybe I'm in consolidation, but I have a better chance of reaching the 23% than not. And then particularly as the Fibonacci started to rise, the pull to the low was definitely going to be strong in that spot. And that's exactly what happened as we came through. We end up with a reset that comes down here. It doesn't get below our orange at this particular spot, and then we make new lows. At which point, then you see an actual ABM reset that took place right here as you dipped up, but you weren't above the 23%, so you still would have to wait on that one for a little bit of a long. So even if you waited and had your stop coming through from the 23%, still pretty effective trade. You don't have to get the exact bottoms of things. The idea behind this is you don't know that this isn't going to drop 10 points, 20 points, or more. So it becomes a strong potential. And then we ended up with this little bit more unique setup coming back through right over here as we ended up into the backside of the day. You ended up with the DOC spread with the orange, green moving below. Of course, you have the steel in this case slightly below, but it's already sort of crossed at that particular point the green. So that makes it a little bit less desirable, and at the same time you can see the brown is rising. Well, your brown doesn't plateau till right here. So what are you to do? You're at the 50%. This can seem like blasé. You have green under red, which is weak. But now that you've plateaued with the longer trend run line here in the gold, you can utilize this steel moving above the cyan and then crossing below. And at that particular point, you know that you have a brief, short configuration when it forms that. Then the question is, okay, I still was not at a situation where the gold was plateauing. It was still at this point rising. When it flattens at this bar, which comes right to the 50% line, which is a very interesting setup at that particular point. And at that range, I'm looking for at least a move that's going to take me to the 23%, and I can evaluate from there. It does stay below with the cyan, and we ended up with a nice decreasing shakeout yield. And then it's just a matter of, you can literally follow that shakeout yield going to the south side. So then, hadn't marked it, but we ended up with the exact same thing. You end up with cyan moving below red, and then boom, crosses above. Now at this particular point, it's kind of interesting because you don't have green below, and that doesn't happen until right there at the start of this bar. You got the earliest indication of it here. If we go and you can actually read what those numbers were directly. So your green is at minus 262 and the cyan was minus 191. So at that point, you formed a little miniature spider right at about 2720. And sure enough, next bar later, you get the confirmation of steel crossing below, and you've already had the shakeout starting its decline. At that particular point, you have no rise in the gold or anything, and then it just becomes a straight plunge from there. So a couple of different areas that you can utilize when you don't have extreme moves, but you have at least clarity with the consistency of, okay, I've got my shakeout moving in the direction that I'm looking. I'm looking at my DOC spread in the form of the cyan moving above, my green dropping below. And at this particular point, which was more powerful, you'll notice the steel was up here above, and you didn't have a reset. So there was less concern about short-term buyers impacting you like it was down here, where you could get an extended sideways kind of move is typically what will happen with that. But powerful to look at it in this context, and utilizing the bonus of when you have extreme trend back over here at the beginning of the chart versus getting into just a muck period of up and down that can seem somewhat choppy. This can provide a little bit more clarity when you're looking at those kind of situations where you're in an extended period where either the green is below red. This is where looking for those crosses of cyan and steel can become valuable, because you can see the steel crosses above cyan right here at the earliest, but even before a GAM comes in. Now you're below negative 13.5 little rose-colored line there, which shows that you're still kind of in a weak mode and you haven't closed above the 23%. Some like to take this trade. It's a little more aggressive because you have a very limited risk profile. You know, you're taking this trade that's right here at 27.16 range. Well, the 0% at 12.50 is your stop, because you're not going to let it break the low on you. So at that particular point, yeah, it's a 4-point risk, and if you're looking for 50% because you've got the declining highs for the Morganacci, you're drawing price to the upside, and you have a flat low right here. And it worked perfectly to that. You got right to the 50% as things started to change a little bit right after that, just below it. So depending on how you were looking for just taking a profit gain on that, or if you were trying to trail it, you might have ended up with just a little bit of profit from this much lower entry. Would have been better than waiting for the 23, because you probably would have been break even by the time this little pop and return back came and you had the clear short develop. And that's just a matter of the patience and, you know, your risk tolerance within each of those. And so I just wanted to point those out. They were really good different signals within one chart that shows, you know, that you have to utilize really what is in front of us. We didn't even talk about the extremes in this because they were less relevant with any of these configurations that we were looking at. Them as pretty benign, but it certainly gives an opportunity to capture extra points within any given day trade. So this was definitely a focus on capturing a few extra points there. So take that information and hold on to it, and that way you have this resource to always go back and make those evaluations on your own. As always, though, I will continue to post these kinds of things and point them out. If you have other questions, you can always put them on the Skype chat. As always, though, trade well.